Hi, thanks so much for joining in. You're watching BQ Prime. My name is Alex Mathew. Now, if there's one market that has seen a tremendous amount of volatility in the recent past, that is the market for crude oil. Just last week, we were looking at the Brent crude prices, and they were nearing the $100 per barrel mark. But overnight, they've slipped very quickly and are now hovering at just about $86. A lot has changed in the interim, and a lot is probably going to change heading into the end of the year as well. To talk about everything that could affect these prices and also the wider commodity basket, I've got Peter McGuire, the Chief Executive Officer of XM Australia, joining me in the studio. Peter, thanks so much for taking the time. And let's set the context to why we've seen such a lot of volatility in this crude basket. What are the various factors at play right now?
Well, Alex, it's lovely to be here in Mumbai, and you've got to be considerate of, as far as the last 100 days, approximately what we've seen as far as crude. It's been electric to the upside. So that very, very strongly bid up. And as you mentioned, hit 95 odd, and I think it was off to the races, and everyone was saying 100 to 105 is very achievable, and that was by the end of September. It's had a washout since then as far as some of that hot air has been taken out of the market, and when that, it's a point of evaporation. And any market that moves so aggressively to the upside, nearly to a point of being parabolic, needs a time to consolidate. And that's probably where we've seen that as far as profit taking. Some figures came out as far as revised forecast moving forward for growth numbers, certainly for Asia Pacific and more importantly for China, from 4.8 to 4.4 by the World Bank. So they're just some of the little factors, as well as a raging US dollar. It's a pretty wild market at the moment, and volatility has been dynamic over the last quarter, and I think this quarter as well.
You know, when we were near that $100 per barrel mark, we were speaking to global commentators, and they were pointing out that one aspect that comes into play when crude does reach that point is US shale and production there. So is that an automatic cap, do you think, that $100 per barrel mark?
Well, you would think that, it's a big attraction to any wildcatter out there that he wants to, $40 or $50 is probably not worthwhile getting out of bed. But once it hits that 80 to 90 to 100, there's a real reason to turn the spigot on and let's go back to work. So the attraction naturally from a shale perspective and for the US to continue and to ramp up production is always an opportunity. But it all comes down to dollars and cents, and at the moment, I'd say it's fairly attractive.
Now, there are a couple of factors at play, of course, more than a couple of factors, but the major ones that I can see are the supply from the perspective of OPEC and the way that it has been controlling supply, and the demand scenario as well, because question marks about growth, but still we're heading into the winter season, and that's when Europe comes into play, US demand comes into play. So what, according to you, are the major triggers heading into the end of the year?
Well, you've always got, from a demand side, heating oil and heat homes and just general, and that's across for, probably a couple of billion people. The next part, of course, is that we haven't seen weather outages. It's been a very mild season from a hurricane perspective, but it still has, the best part of a month and a half to go. So anything that happened with Mother Nature. The third part is growth numbers and what's happening as far as demand destruction or a return to higher yields from interest rate policies, and what that can do with a raging dollar. Can that impact and slow markets down as far as consumption? So we're all in that tight point. You've got to be mindful. Also, the yen is now, from a Japanese perspective, more expensive than it was in 2008.
150.
Yeah, that's right. And oil was then 150. Now it's at 90, and it's more expensive on the bowsers in Tokyo.
Certainly. Now, if we're talking about the dollar, and you mentioned the dollar, it's been raging in your words, right? 107. We're likely to see higher interest rates for the foreseeable future.
Yes.
And that, I think, is the base case that everybody's pointing to.
Well, they are now.
Yeah. So if that is the case, one would assume that the dollar remains strong well into next year.
One would think so.
So what are the implications of that?
Well, you put your mind back, the best part of, say, 11 or 12 months ago, Alex, when we were at 113, 114, and all those currencies were crushed. You had a euro running at around about 0.98, 0.97. You had the Japanese yen really under the pump. We got to a point there, the pound hit 1.03. Then it rallied to the upside at 1.3. So if that US dollar really takes a bit of a leg up here as far as policy is concerned and sentiment from Jay Powell, the chairman of the Fed, then there's every chance you could be punching on 110 to 111 before Christmas. And that really crushes all other currencies. So I think that's, from a trade perspective, it's very exciting for retail traders, and naturally it's the biggest market in the world to trade. But it's not going to be short of opportunity. There's going to be many days there of excitement.
Turning back to commodities, crude and the wider basket, of course. You could call it a joker in the pack because you don't really know what the Chinese government is planning in terms
100%
of
stimulus.
Yeah, in terms of stimulus. It's been talked about for some time, but at the same time, you're seeing headlines, Peter, about Evergrande and the fact that it's heading lower. It's seemingly in a spiral. There are question marks about the so-called real estate crisis there, implications for metal demand, implications for commodities in general.
Of course.
On the downside as well as the upside, how could that factor work in the near term as well as heading into next year?
Well, I think it's got to be a point in time that you've got to see something very, very decisive from the Chinese government in the sense of how it bails out or does some form of policy statement or action with the property sector. It's such a huge component of their GDP and massively involved in all consumption, as you mentioned, from commodities, cement, steel, copper, you name it, everything. So the other side, of course, is that who's holding the debt? You've got 120 banks internationally that are holding all that property debt and about 180 or 190 domestic banks in China. So if it unravels, and you said more or less your words, a spiral, is it a death spiral? It seems to bounce, then it seems to crater, and then all of a sudden Evergrande's back on, it's going well again. And then you've got issues as far as the chairman and whatever happens there with their executive team. So I think that it's far from over. And watch this space carefully, because you hear the numbers of there's 90 million approximate apartments or homes that are uninhabited in China. So there's obviously overbuild and someone's holding that debt.
So it's not just that. One would assume that because there's so much unused inventory, as you pointed out, the prospects for real estate, even in the next few years, is not very good. And so therefore, from that perspective, would you expect softness in the base metals?
Well, you would from a consumption side, I would think, from China. But I look at the other part of the world, and there's a place I'm currently in called Mumbai, and everywhere I look at construction. Now, I drove in here last night, and it amazes me every time. And here we are today, and it is just crane central. You've got that much demand for all forms as far as construction. And have a look at the concrete and the steel. What you'd be putting in here on a daily basis is enormous. So it's a little like there are different times of commodity cycles, and probably China's grown to where it has to grow. But India is just game on, and I think it's going to be electric for the rest of this decade from a consumption standpoint. Go to Africa and have a look. Go to Abu Dhabi. I was in Abu Dhabi yesterday. The construction there is just enormous. So it all takes base metals to make things work, and I don't see that drying up anytime soon.
So you are in India, and so that presents an opportunity for me to ask you. You've been looking at this market and this country indeed for quite a while. What are the opportunities for you per se when you look in and you look at opportunities to invest, if at all? Where do you see those opportunities?
Well, I just think you've only got to look at the different, as far as if you're looking at the economy, you'd have to say construction companies, you'd probably have to say the financials, probably health, because the amount of people here is just enormous, and nearly everything from everything rolling into all the services. So electricity, you'd be looking at, I just think, energy companies, you name it. I think there's plenty of upside yet. And, and if you're going to be a stockholder, it's something that you probably put in the bottom of the drawer and come back in, 20 years' time and you give it to your kids. That's the sort of thing. I mean, there's a difference as far as your risk perspective. Are you looking at short term or are you looking longer term? Some of these big conglomerates in India have been extraordinary over the last 20 years.
Certainly.
And so I don't think that storyline's going away. I think there's going to be greater opportunity moving forward because of more consumption.
Certainly. Okay, to close out that conversation on commodities, and then I have another exciting question that I want to ask you. But Brent crude, what is the range that you expect? Not just obviously in the remainder of the year, very little left of it, but heading into next year?
Well, we've got 3 months, and I think this 3 months is going to be very, very wild from a volatility standpoint. So leading up to Christmas, I won't be surprised if it takes 100 out. Now, we had the momentum there. If a week and a half ago, you would have said, oh, yeah, sure, Pete, well, we're at 95. That's a big call. But today we're at 85 or 86. So I think there's upside there. I would be very, very surprised if it falls below $80. So I'm going to say between 80 and 100. And I think it'd be erring more to the upside than the downside. And that's my view at the moment. Rolling into 24, there's a lot of things can happen in 24. We're in an election year in the States. We're 13 months away from an election. We've got a lot of major concerns globally. And I think governments will have to be proactive as far as offering because it's election years in many countries, you'll have to look at subsidies for their consumers and their population as far as energy consumption.
To that point of 2024 being a year of major events,
yes,
one would assume that at some point in 2024, at least that's the base case, there will be a change in the interest rate cycle. What happens then in the US, I mean?
We're going to get to that point. And I don't know. I mean, two things. There was a big chance that we would have seen, and everyone was saying going back 6 months ago, that you'll be seeing possibly a rate cut at the end of 23.
But it didn't happen.
It didn't happen. Well, there's going to be a rate hike at the end of 23. So that's against everyone's mindset. So how does that roll into 24? If you have energy prices between 90 and 100, you'll be seeing higher inflation and you'll see probably a more aggressive Fed and central bankers to try and tackle it. And the only way to do that will be raising of rates. So I want to get through to probably the end of first quarter and see what the Fed cycle is going to be, where the dot plot is, and of course, what happens as far as employment numbers, the strength of the consumer in the States, where are we with equities, and the risk as far as, you're back at 2006 levels for the 10-year and the 2-year. How much further can it go? If it goes up another %, that's really going to be a big attraction, and people will be saying, I don't want to be in equities, I'm just going to put the money in the bank, buy treasuries, and it's fantastic.
Another %, my goodness.
Well, I'm not saying that can happen, but if you go 25 basis points and oil goes to 100 or 105, then that's going to be a major concern for central bankers.
Certainly. Okay, so you're in Mumbai, and I would contend, Peter, that you've seen less traffic today than you would normally do because the World Cup is kicking off today.
Australia here to win.
No, that's what I'm asking. I'm asking you. So you predicted where crude prices are likely to be. It's a range of $80 to $100. But what's the score going to be on Sunday?
I don't know. I've got no idea. I sit here and I don't want to go out on a limb. I just hope that we play well, and that's all I want. It's dynamic, it's exciting, and you guys are the team to beat.
Interesting. All right, so we'll see how that pans out. Peter, pleasure speaking with you. Thank you so much for speaking to BQ Prime.
Thank you, Alex.
Viewers, there you have it. Everything that you need to watch out for in the commodity space. If you've got questions or comments, don't forget to write to us on any one of our social media platforms, and do stay tuned. This is BQ Prime.